What is going on, guys? Welcome back to another video. In this video we are going to go over something that I think more people need to talk about. So with that being said, let's go on ahead, cue the intro, and get right into this video. I've been getting dirty money. Hey guys, thank you for watching this video. Don't forget to hit that thumbs up and subscribe. I'm putting out at least one video a week, giving you guys absolutely free content that's going to help you guys, whether it's long term, short term, just in finance and everything like that. So with that being said, let's jump back to the video. Okay guys, so a lot of people they're always trying to figure out, should I be buying really good companies that you like. For instance, I have Ford pulled up here. If you're a big Ford fan, so maybe some people are GM fans, whatever, same difference, Chevy fans, whatever the case may be. Or should you be buying monthly dividend stocks or quarterly dividend stocks in order to create that income? So in today's video, that's what I want to cover. So to jump right into this, you see that I have an options chain open right here. And this is going to be something that not a lot of people probably know or see a lot or anything like that. So I'm actually going to get rid of it for just a second here. And we're going to talk about Ford. Ford is like the basic one. We can go to Peloton. Maybe you're a big fitness person and you want to own a piece of this company. And you're going to notice something. Well, this one doesn't look like it's good based off of Seeking Alpha. But we're going to look at a few different things here. So when it comes over to it, you got Overstock, Pinterest, Snapchat, Uber, and we're just going to fill out a couple of these that we can go through. And I'm going to talk about why maybe you should be buying. And again, this is 100% your choice. Why maybe you should be picking up 100 shares or just to start out and being able to do a couple things. Now, some of you probably already know what I'm going to tell you and how to move it if you're watching this video. So the kind of the difference, but everybody's favorite is QILD, right? Everybody loves QILD, man. I even said recently, I think it's time to buy some more of it at the prices that it's at. Here is the dividend history of QILD. Right now, it finished today at 17.48, so we're under 17.50. Right now, you're getting 17 cents a month based off of these two right here, the past couple months. And, before that, we were in the 20s and low 20s, of course. But that makes a difference, and those prices do add up. And you can see we did very well. We hit 22 a few times, 19. And then we had this special dividend. Don't take this one into an account. That was a very special dividend. And honestly, I'll probably buy some this November just so to see if I can get that special dividend again. I absolutely will. I'm not going to lie to you and act like I'm not going to. But the point of this video is, should you be buying that? Or maybe we should be buying some, for instance, Ford. And I'm just going to use that as an example, guys. There's multiple companies out there that are really good companies that are under about 30 bucks. And I'm going to show you the difference because everybody wants to buy these companies that also have dividends. For the longest time, Ford had a great dividend. Or not necessarily an amazing dividend, but had a solid dividend. Now, with that being said, I also want to type in here because I'm just going to show you something because Ford did quit their dividend. But, yeah, you can see they are back on top of it now. Now, did their dividend get slashed? Yes. But they are actually back to giving out their dividends. So this is actually going to be a really good company to choose this for. But QILD, what you can do, so you can own 100 shares of this. Now, it's got to be at least 100 shares of this in order to make it worthwhile and to make it cash flow like the other ones and the QILDs and stuff that's going to give you a bunch of money every single month without you really doing anything. Now, again, you guys go into your brokerage and still buy more. But I'm going to show you how you can be buying Ford and cash flow it just like you would a QILD. For instance, let's do the math just to make it 100% relevant. So 100 shares of QILD is going to cost you at $17.50 per share, so $1,750 exactly. Now, that's going to get you obviously 17 cents times 0.17 17 bucks, obviously. Very simple math to do there. Now, what you can do though is you can come over here, and we're going to open up this options chain again. And we are going to go over here, and I'm going to click back on Ford because that's the one I need it on. And every month you can sell an option, and this is the probability up here. This section, the fourth one over, the only one with a percentage sign, 10% possibility of going in the money, which means you can own 100 shares at $11.81 is what it closed at right now, or what it's actually at right now after hours, $11.81. So 1,100, so basically 1,200 bucks. We'll round up for you just in case you see this in a week. But 1,100 bucks, and you can sell an option every single month. So for instance, this one is 31 days, and you can see it highlighted up in here in these dates in the parentheses. You can sell one of these and make $10 flat, or you can own 100 shares of it. And if you own 100 shares of it, well, you're only getting the same amount of money, which is $10. Well, but if you own the shares and you sell the covered call on it, you're making 20 bucks now on less money compared to the $1,700 you had to put up front with QILD over here, or Ford. Yeah, QILD was the one where you had to spend $1,700 to only make 17 cents. Now maybe you made 20 cents on it, so you got 20 bucks, but 17 cents has been the past 2 months, almost 18. But you get what I'm saying here, compared to Ford, which in my case, and what I believe is a much, much better company. But you're going to get a dividend every quarter, just like always with Ford, more than likely. Don't get me wrong, anything can happen in this world, and they could cut it. They have before, but they seem to be a solid company, and everybody knows them. It's a well-known brand, and you're investing into a solid company. And then on top of that, you're selling these options. So, maybe you do want to go a little bit more. Maybe you want to collect 20 and you think it's going to continue to go down. Well, that's when you can continue to sell these covered calls. But hey, maybe we're in a bull market and you want to go sell puts. Well, it's the same thing. You just come over here and you sell it for 20 bucks. It's the same thing, guys. And let's go to Peloton, because I think this is one that has had a lot of hype. It's $9, so you're looking at under $1,000 again, and you're going to the option at 10%, and you're collecting anywhere between 16 to 26. The last one that was sold today was 32 cents, guys, which is $32 actually per option, which is equal to 100 shares. So you're getting paid $32 just to hold it. What about Snapchat, guys? Snapchat's pretty cheap too. That's only $1,300. $1,300 and some change. Actually, it's almost 1,400 bucks. Let's round up there. It's still less than 1,700 bucks to buy 100 shares, and at 10%, you're still collecting. I would go up to the 11% one here. Maybe not. Maybe you just go here, collecting 26 to 30 cents here, depending on which ones you're going to choose. And I'm lowballing this, guys. Lowballing it. Again, you want to go to Pinterest. Well, Pinterest is only $19 a share, which means you are going to spend almost $2,000, but you're still going to collect 30 cents. You could actually collect more. Depending on what date you buy on, you may be able to get even more. Maybe you're collecting 35 cents, 33 cents, which is equivalent to $30, $35, so on and so forth, guys. And again, Uber. Again, if these are companies that you believe in and they're solid companies, go find stocks that you can sell covered calls on and still make 30 bucks a month. And then you know what? Buy 30 bucks a month extra in these stocks. Add a couple more shares every single month. Then you're going to have 200 shares eventually. And you're going to do that snowball. Guys, if you don't believe me, Warren Buffett does this, guys. Don't just believe me. Go check it out for yourself. Tell me which one you actually want to do. Would you rather own a stock that continues to go down? Are we not even going to talk about that, guys? Guys, let's look at QILD. Let's look at the overall growth of the chart. Overall, not 1 year because it's down pretty bad, but max down almost 17%. I'm going to round up on that one because that's 16.94%. Say we round down, 16% max actual loss on your money. And it's not rising. It has never bounced back up to its highs. I mean, it's gotten close, but it's never actually went and made higher highs, which is that's a red flag compared to a Ford or a Snapchat, guys. That's going to give you, here it is, hold on. You're going to be able to look at these charts, guys. Look at that. It actually went up when the whole market was going up. And then, yeah, it's coming back down right now like everything else. But it was almost at it was at $83 a share. And now you can pick this up for $13.73. My biggest one is Snapchat. I like Snapchat. Again, it's a social media company. They're doing a lot of things over here to get better. But look at it. It's the same type of, yeah, $83. Snapchat. Here we go. Maybe you want to do Uber. Maybe you want to do Pinterest, Ford, whatever. There's multiple different companies here you can do this at. But if you're buying it at $1,400 and you're cash flowing it and being able to make more money, why wouldn't you do that as well as collecting their dividends, guys? That's all I'm saying. That's the only point I want to make in this video, guys. Don't just choose one. Do both. Get 2 times the cash flow, guys. 2 times the cash flow. Get the dividends. Sell the covered calls, and you can roll out of those, guys. So if you're like, oh, I'm going to lose my shares, you can roll out of that. And I can teach you guys how to do that. Comment below. I can make a video on that. But look at the big picture. Don't just get caught up and I want to put my money in a 401k and things like that and never grow my money dramatically. Guys, this is how the wealthy do it. They own equity. Guys, own equity and stuff and get paid the dividends. You know, cash flow. Cash flow is going to be king no matter what. You're always going to have bills. You're always going to have a cell phone bill. I mean, I don't know about you guys, but I don't know anybody that doesn't have this in their pocket. Cash flow is going to be king. So with that being said, guys, thank you guys all for watching this video. Make your own decisions, and I will see you guys in the next one.